And then at the end of,
Okay.
I had about
Okay.
7 factors which I documented. And at the end of the documentation, I summarized my findings of the best um, factor that would be used under question two. And I think that was the smoking. Sorry, the
I thought
health.
you were documenting the steps as well.
The steps as in like
As in
from
the whole
where I
process.
take it, the extraction.
As in the whole
So
process.
yeah, so under each step, so for example, so we are doing an ETL, extraction, transform, and load, and we are um, extracting from Excel to notebook, right?
Mm-hmm,
So
mm-hmm.
in VS Code, I did documentations over there. Um I didn't just transform the data, but I also wrote comments like under each transformation, I wrote comments. So I have documentation in VS Code. And then
Okay. Okay.
when yeah, so I arranged it in VS Code in such a way that when I'm done, I can be able to push to my GitHub. So
Yeah.
I did that with some README doc
Okay.
so
Did you
that
use
if
Copilot?
um, yes and no. My Copilot got expired. I mean, as in the token, it's on the
No,
free
no.
tier. So at a point,
In VS Code, you can integrate Copilot. You just
yes,
have to. That's the
I
one you
did. Yes, I was using Copilot, but at some point, it was telling me it's out of, I don't know. But I still managed to document, and it's not my first time. But I'm a software developer, so it's not my first time um, writing codes and pushing to GitHub. So
Okay.
I
Okay.
just took it because I'm pivoting, so I just took a different step.
Proud.
Um,
Okay. Yeah, do you
so
well
I did that. Yeah,
as well. Okay, okay. So that is very good. You're doing really, really well. That is the whole point of this exercise, to be able to work your way around it, build alongside us. It's not just come and watch and then go, but you have to go back and replicate the thing while customizing it in a way that would make
yeah.
you stand out. So, very well done. I think next week we will take other people's updates as well. I think Holly is back with a very interesting name, but still Holly. So, hi Holly, if you can hear me, please.
Yeah, hi Vanessa.
Yeah, how is it going? How has the day been?
Just work things,
Just
work
working.
stress and things here, but yeah, we are thankful and grateful.
Facts, facts. That's word. Okay. I think I'll just hand over to you. I've hyped you. I've told them how that you're a big man, and if they don't join, I've told them all that.
Hey,
So
I beg you.
it's unfortunate that you weren't here to hear all the fans, but they already know that you you're serious, big time data
I
scientist.
beg, because they've given me light off. That's why I
We
went
know,
off.
we all know, we all know.
They said they are aware. They already know.
Holy, I know.
You know they gave me light off. How do you know?
Lights out, lights out, lights out. It happens everywhere. So,
Actually, my area there is like a personal vendetta.
affronting.
Stress.
Big man hoodie.
Apparently, Vanessa, I think you are the cause.
Pardon me, what did you say?
I said, I think you are the cause.
I am the cause. How?
Yeah.
How?
The rampant lights off in my area, apparently some someone works, one of the guys that work at ECG, his girlfriend gave him broken heart, and the girlfriend is in this area. I'm suspecting this you, since you live
Hey,
in this
black.
area.
Please,
Hey,
please.
hey,
Agenda. This agenda won't take. Please, hurry up.
nah, this
First.
one, this one, there's an agenda somewhere.
Agenda must
No,
agenda.
no. Please, I'm not the one. I'm not the one. Okay, I'm not. Any- okay, so I'll just leave you to take over, and please stop the accusations. I'm not the one.
Right. Okay, we can start, right?
Yes, please, we can start.
Mm, I'm seeing how best to navigate this. 1 second. Noisy. Okay, let me share my screen. But I hope my internet is okay because I have to switch to mobile hotspot, so I don't know how good it's going to be.
Oh, yeah, you're clear.
Okay,
Yeah,
that's great.
I hear you.
Okay, let me share my screen and then we can start. Okay, can everyone see my screen? We're good.
Yes.
Okay.
Guys, feel free to unmute and speak because he's sharing his screen. He can't see your
Mhm.
messages and reactions.
Yeah, we can see your screen, Oliver.
Okay, guys. All right. So before we proceed, right, let's understand the problem. Okay, let me just try to break it down for you guys as we proceed. Okay, so it's very simple, right? There is insurance company. Unfortunately, this time we are on the side of the insurance companies. They've contracted us and they said they are making losses. They are doing underwrite. They are doing a lot of underwritings, and then they want to improve their premium pricing as well as to also be able to detect fraud, right? So just think of it this way, right? You work for an insurance company or you own an insurance company. People come to you and you are selling premiums. You are selling different insurance health premiums, right, to people. You want to be able to charge them well, right? Um, but then it looks like their problem is that they are not really charging people well, the right premiums, right? So when people come based on certain statistics or certain questions and answers that you will give them, you will charge them equally. So when person A goes for this premium and person B goes for the same premium or for the same plan, sorry, I'm trying to use the plan. For the same plan, you are not going to charge the person the same amount based on certain statistics or variables that the person holds. Okay, so that is all what the project is basically about. And the main thing that they will use to make this detection or to know how much exactly we are going to price you is the risk score, right? So that is a variable that we have to calculate. It's not in there. It's very, very necessary. We could calculate the risk score in different ways, right? So I was actually deliberating about this. Um, Actually, when it comes to, let's say, real deployment or something, we can look at different weights that we can use to derive this risk score, right? We can use actuarial analysis of actual claims data. We can also use regression coefficients. So this risk score is not there. So there are some pretty extended ways that we could use to get all these risk scores. But for now, or even for our level, a lot of us are even just starters, right? There's this risk score that we should have in the data set that we don't have it. So we are just going to use domain knowledge approximation to calculate it and make this risk score. So when I get to that place, I would explain and go into details. Okay. So far we are aligned. So far we are aligned.
Yes.
Yes, yes.
Yes, sir.
Are you sure? Any questions? And it's Holy, not say I don't just call me Holy, right? Okay. So
We are aligned.
okay. So and feel free if I'm going too fast or whatever, you can stop me and then ask me questions. Okay. All right. So the last time I spent a lot of time breaking down the different steps we'll be taking to derive or come to an answer. So um, the final aim of all this project, what we are doing is that we are going to build a simple, let's say, deployment place, right? So when a customer the comes into the insurance company, we ask it, or we will ask the person some details. What is your name? How old are you? What's your BMI? We'll check all these questions. And then we'll put this into our deployed states, and then it will immediately tell us that, okay, this person's risk score is this. So, or hence, the person's the person is high risk or low risk, or so that or critical. And based on this, they will know exactly how to charge the person. Okay. So, for example, if myself, I go to get an insurance company, I'm a very, very healthy man. I'm very young. Um, so I'm not closer to death. So if I go for like some life plan insurance kind of thing, the premium that I'll be paying will be lesser, way less than somebody that is way older than me, right? So someone that's like 80 years old goes to an insurance company to get a life insurance premium or whatsoever. It's very, very likely they will be paying for the person might die, right? It's very, very likely because the person is old and closer to his or her grave at that age. So the person's premiums are going to be higher than me or higher than mine. Okay. Okay, that's good. Sorry, my light is back, so I'll just cut off briefly just to switch. But yeah, let me proceed. So, having said that, I want you guys to have what is it called? To have the problem story in your head. And then as we proceed, we are going to move with it all the time. I've told you, understanding the problem is understanding and knowing the process is way better than the codes or explaining the codes. We have AI, and then hell, I use AI to generate all my codes. I'm not even gonna lie, right? But then I was able to I told it exactly what I want, right? So maybe, to read the CSV file. I want to read a CSV file. They will give me DFPD dot blah blah blah. I mean, these are simple codes I know, but I'm just saying that if you know your process and your steps, you just query or you just ask the database, and then you ask the AI, sorry, and then it's just going to give you the answers pretty straight. So the just follow the process. Okay, so I'm going to dive right into the project. So already, I think we read our data sets the other time. It's my Wi-Fi. Let me switch. Okay. Okay, right. We are. Oh. Can you guys still see my screen?
Yeah.
Yeah.
Yeah, we can still see your screen.
Okay, okay, all right. Okay, so now we are reading the oh sorry. Mm, Hmm. Okay, so we are reading the data set, and the other time we realized something. DF, we have 950,000 rows, right? And then right away we realized something. So I'm going to go right ahead. We realized that if we take what is it called? I'll just be copying my code, but then if you don't understand any code, I'll just explain. Okay. Is that cool?
Yes,
Yeah, yeah.
please.
Sure.
Yeah. I don't, because some of the codes are pretty long, so I don't want to be typing a whole lot of things. Okay. So here I'm just showing the first three rows, df.head, showing the first three rows of the data set, right? And then as well as the shape. So we have 23 columns, 950 rows. And then we quickly find out that a lot of the rows are duplicated, right? But if you, let me show you here. If you run, if you look for what's the name? Duplicated rows over here. Okay, no, sorry. I have already run this code. Let me take out this. Come in. Right. So if you look at this, right? If you look at this code, that's df dot duplicated over here. You realize that there are 90,000 rows, and that's when we dropped the customer ID. If you recall, last week, someone alerted us and told us that if you drop the customer ID, you realize that there are a lot of duplicates in the data sets. So immediately when I dropped in this code, I'm dropping the customer ID and printing the number of duplicates rows we have. There are 900,000 duplicated rows. So that means that only 50,000 rows are not are unique, right? Immediately when you drop so that is it. So now I'm just reading. So duplicate, oh no, I shouldn't have run this path. Yeah. Oh, it's raining already. Okay, so when you drop the column, you see that now we have what? Only 40,196. We good?
Yeah.
Are you sure?
Yeah.
Hello?
Hello. I'm a bit confused
Yeah.
because I see you say unique full name is 40,196. Does it necessarily mean unique like unique
So no, the
rows?
full names is the full name column.
Yeah.
Yes, I was checking, so I was doing a little bit of experiment and checking the full name column with so let me show you here in the next code.
Yeah, hello. Please, can I ask a question?
Yes, go ahead.
Yeah, so for someone who is not that good with Python, can I do
Yeah,
all the cleaning with Excel?
you actually can. You can do the cleaning with Excel. You can do the cleaning with Excel. You can do the cleaning with a lot of tools.
All right, thank you.
But what I was also saying is that with if you're not good with Python, right? I mean, it will be good to learn because it's pretty much straight up code, and then the whole cleaning is easier with Python, right? But um, doing cleaning in Excel with this much of data is actually going to take a lot of time, if you get me. But since we have AI and you know exactly what to do, I'm thinking you just go straight and then ask it. This is your data set, yeah, it's been presented in DF. Give me the code to remove all duplicates, like pretty straight up, and then it will give you everything. Do you get me?
Yeah, I guess you. Thank you very much.
Okay. All right. So okay, so let's proceed. Someone else was asking a question.
Yeah, Holy was me.
Yeah. Well, what did you say?
I was saying that the when you drop the customer ID and you check for unique rows, it's still
Mm-hmm.
showing 150,000 rows.
Okay, so wait 1 second.
Please, a quick one. I've
Yeah.
switched devices and it looks like I can't see your screen. Is it my end or everyone is facing the same challenge?
No.
I think they have to answer, guys. Can you guys see my screen?
Yeah, yeah.
Yeah,
Yes.
I can see.
Yeah, we
Yeah,
can
we can
see your
see it.
screen.
So can you, I don't know. You said you switched devices.
Yes, please.
Can you, I don't know, maybe log off and come on back again and see? Or I should stop sharing and share again.
Holy, please, I'm back. I'm back again.
Can you see?
Yes, I can see now. Thank you.
Okay. All right, good. So, where was I? I'm trying to. Sorry. So you said I dropped the column. So this code, right? This code that we run here. Here we're starting. Let's just read the data set. Give us the first 3 columns. Drop those. Okay, right. So over here, right? I'm on this cell. We are dropping the customer ID column, and then we are checking for duplicate rows, right? And then so the duplicated rows in the database in the data is what 900,000. Okay, are we
Yeah.
aligned here? Okay,
Yeah.
right. Then from there, okay. Then from there, I'm checking the unique rows, right? So if 900,000 we know the data set is 950. We have just seen that 900,000 are duplicate rows. So the unique rows we have are what? 50,000. Okay. The duplicate rows are 900,000. Unique full names are what? 40,196. Are we still confused?
No, I'm good now.
You're good now.
Yeah.
Okay, let me delete this. I'll come to it. Come to this. Okay, all right. So let's proceed then. So just to confirm, we want to see names that appear more than once, right? So you can see Michael Johnson, right? Appearing 475 times. Okay. Michael Smith appearing 418 times. Michael Brown appearing 330 times. What does this tell you about the data set? So from there, I'm trying to see what's the name? Look at Michael Johnson here, right? Right. We have a name here, Michael Johnson, age 65, male, cybersecurity senior. Another Michael Johnson is here. He's 28 years old. He's a male. He's a civil engineer. He's a senior. He's in Takrady, but this one is in Cape Coast. So immediately you realize that they are two different people. Okay.
Holy.
We good?
Michael
Yes,
Johnson
we
is a
good. We
female.
good.
Yeah. Okay. So immediately we see that. So let's dive proper into only Michael Johnson, right? Let's filter to data set where full name is equal to Michael Johnson. So when we do that, we can see all the Michael Johnsons in the database. And then we can tell immediately, hey, this Michael Johnson is a female. That's serious.
It's transgender.
Transgender. Okay, all right. So yeah, I mean, I don't know about this data set though, but we could use something like that.
You should have changed
But
it.
yeah,
You should have
so
changed it to Michaela.
to Michaela Johnson. Anyway, so but what's important that they are all unique roles, right? When you look at all the rules, you can tell that they are all unique roles. So now the data set drastically comes down to 65, to 50,000 rows. So 900,000 were duplicated. As to how that happened, only God knows. So now let's read our data sets well. So now we have what? 50,000, right?
Yeah.
Yeah. So now straight up, we have 50,000 rows and 22 columns. Why do we previously we have 23? Why do we now have 22 columns?
Let me drop the customer ID.
We dropped the customer ID column. Okay. And yeah, I mean, it's not a column we need anyways. We are not going to use customer ID for analysis in the context. So why are we not going to use customer ID for analysis or for our machine learning? If you think about it, first of all, customer ID, you're not going to use it for anything when it comes to machine learning because it's just a data analytics record that is to
Yeah.
just identify or show that a role is unique, right? In this case, it was actually throwing us off, but since we are good data analysts, we've caught it, so that's fine. So now we've taken customer ID column away, right? I want you guys to explain the data dictionary for me, and let's proceed. Okay? Break down the data dictionaries. So when you say full name, I'm trying to make us do all this so that you know exactly what is it. So we didn't have a data dictionary with the data set, but then we can do our own inference, right? When you say full name, obviously the full name is the name of the person or whoever is being insured, okay? The age is the age of the person when the person was doing the application, right? The customer's age at the time of the application. When we look at the gender, so that's obviously the customer's gender, right? So as we are going through this data dictionary, you should be asking yourself, are these variables or are these columns relevant to building a machine learning model, right? So full name, do you guys think full name is relevant to building a model?
No, the full name isn't relevant.
Okay, all right. So we just put in ahead, and that's true. It's not really in context to what we are actually doing or what we are trying to build, it's really not relevant. It's not relevant at all. You may be building something else that might be relevant. You actually need a person's full name. If you're trying to build a model to tell probably if a person's race, African, white, full name in this sense will actually be relevant because African names have some, our names are different. So, but just in this context, it's really not relevant. Okay, occupation, that's the person's job type, right? Do you think it's relevant or not?
Yes, it is relevant.
Who said it's relevant and why?
Umbrella said it's relevant. I did.
I cannot hear.
I did. I said it's relevant. Umbrella.
Okay, so why is it relevant?
Depending on the occupation, some occupation might have, high risk. So you need to factor that in our model. Whereas
Yeah,
if
all
you
of
do
that. Yeah, as
typically
simple as that.
someone is a
Yeah.
minor, definitely. That's the
I
difference
agree.
there.
Yeah, as simple as that. So it is relevant. So if
I agree.
someone is doing some job, if someone comes to you and he's a wrestler or those kickboxing things, Charlie, it's a high risk job. So it's really a person's occupation is relevant to what we are doing, right? So we are going to keep it in. Um, monthly, which one is the next one? Grade level. Grade level, I'll say is relevant. Who thinks different?
Holy, grade level as in their level of education.
No. I think it's their job level.
Oh, okay.
The
Okay. So
so whether I think the unique values there were junior, mid, or senior.
mm,
Would you say it's relevant? In itself, it may not be relevant. There's also another
uh-huh.
way to think of it. In itself, it may not be relevant, but it would
Yeah.
help you to do some kind of like feature engineering, right?
Yeah.
Yeah,
So
and then maybe when we
I was also thinking that I mean people who are like senior levels can pay higher premiums, right?
right,
Compared to maybe junior level roles. So
right.
it will be good if they have that information. And
It is, I believe. And also, like I said, it could be a proxy for um deriving other, like maybe trying to find out the person's income stability, where the person is in his career stage, all of
yeah,
that, right?
yeah. Thank you.
Okay.
Yeah, very true.
So monthly income, of course, also necessary. Um, we can use it to derive other things. Region. So region, would you say region is important?
Hmm. Region.
Yeah.
It could be.
Mm. Why would you say it could be?
So if they are living in an area that's makes them a risk group. If it's a known fact that this particular area they are prone to ABCD, then
Okay.
that could become relevant.
Okay. That's one way to look at it, and that's actually right. If you are there living in a snake infested place and you come and take insurance, you go fix that early. Me, I would add it to it and say, Masa.
Exactly.
So yeah, I would take that. I would take that. Right. Another
I'm
way
actually
of
writing
also
them down, like you are saying.
yeah. You should. Another way to also look at it is proximity to good healthcare,
I
good
agree.
healthcare service, right? So you are obviously someone in Accra would have a better healthcare service because we have like premium healthcare services in Accra as compared to
To
someone who
other
is in
regions. True.
other
True.
regions and other places. So I would say region is also a good participant. It might carry, okay, you will come back to it. So then we go to product applied. So that's the products that the customer enrolled in.
Mm-hmm.
Obviously,
That one they're
it
fully
is
there.
um, premium. That's the monthly amount the customer is paying for their policy payment method. So once you do this, you go through this project by yourself, and you are going through all this, like trying to redo it, you should just think about all these things, okay?
Mm-hmm.
And then we'll pick it up from there. So I'll just jump to which of them would you like us to look at to
I think
explain?
payment behavior.
Pay, payment delivery,
Behavior.
payment behavior, right?
Mm,
Is
So
it necessary or not?
payment behavior, as in on like maybe if we are analyzing maybe in a period of 6 months, are they paying their premium regularly? Is
Yeah,
that what you
frequently,
mean?
yeah.
Yes.
So I think that
Yes.
information is relevant too.
It
Yeah, I
is
think
Yeah.
relevant.
that
Yeah, it
information
is.
is relevant. Yeah.
It is. It could to tell us if the person is hired. Yeah, it is. It's a very
Mm.
relevant. It's a very relevant column.
Mm.
Okay. Are we good? So we can proceed, right?
Yeah.
Okay.
Yeah.
Okay. So blah 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 blah. We'll proceed now. So now let's now look at like the statistics of the data sets. Oh, what did I do? Sorry. No, I wanted to see the df dots describe. Okay. All right. I think the last time we went through this as well, so I'm not going to go too much into it. Okay. So now, I think I found something else that I wanted to alert us on, but so over here, before we go into EDA, we realize that claim severity, right? There are 28,927 missing. That is what 57.85, okay, percent of the data set is missing. Do you all agree with that?
Yeah.
Yeah. Okay. All right. Now let's look at we will treat it. If you check in the data sets, you realize that the places where claim severity is missing, it equates to what is it called? What's the other column? That is where the claim frequency is 0. Okay. So all the places where claim severity is blank or there's no data over there, that's the place where claim severity is, claim frequency is 0. So we also put that in our mind. So basically, we'll just call it none, but we'll come to it. We'll treat it in a way when we get there. So let's look
Okay.
at the um, let's look at the categorical variables in the data sets, right? So straight up, we know what the categorical variables are. Gender, occupation, they're all categorical variables. So if we take a look at them, then we are looking at their unique. So for gender, we have male, female. Occupation is either is a driver, data analyst, construction worker, software engineer, medical doctor, civil engineer, accountant, nurse, teacher, cybersecurity specialist, right? Grade level, junior, mid, senior. So you also take your time and then you break that one down. Okay, so let's go to EDA, right? You guys know why we do EDA, right? Do we?
Yeah.
Yeah, can you please tell us why EDA is necessary? And EDA is basically exploratory data analysis, right? We are exploring the variables in the data sets So we are starting with univariate analysis. That is, we are looking at each variable. And in this case, we are looking at the numerical variables, age, BMI, premium. We are looking at them independently, right? So I'm looping through the whole data sets and then so that it can just give me for all of them at once. So
Yes.
this is also very necessary.
Charlie, this thing they give me nostalgia. Oh.
What's giving nostalgia?
Charlie, I see the plot now. I say, hey, it takes my mind back, man.
Mad.
Charlie,
Okay,
hey,
now let's
the
try and
sleepless
break it
nights.
down. Let's try and break it down one by one. This is age, right? Who can explain what this age is telling us? This age histogram. What's telling us? Who can break it down?
Hey, hold on.
So there are two lines in.
So
There's a yellow line and there's a red line. The red line indicates the mean, as you can see, and then the yellow indicates the median, right? So this is on the x-axis. That's the different ranges of age. The age ranges from 20 to 60, right?
To 60.
If we see the mean age is 43, the median is 43. That definitely tells us something, right? It tells us that the data set is perfectly symmetric. Okay. So even as you can see, you can even tell there's a perfect symmetry in the data set, right? So basically this histogram is just letting us break down the ages column and seeing how they are spread, right? Amongst how they are spread in the data. Okay, so ages 21 and 22. So maybe this one over here, right? They are tall bars. This one will fall under maybe, let me see. So it's between 30 or something. So I'm just so people, I said people, individuals or the customers, right? This is how their ages are spread in the data sets. Okay. So and there's no skew. That means that it's not slanted to one side, right? So this also helps us with it helps us it tells us if we have to do any transformations in the data sets when we go to encoding the variable. So maybe those log transformations, like this helps us make all those decisions, right? So the same applies to BMI. It's evenly spread, it is symmetric, there's no skew, right? The values spread roughly or uniformly from 18 to 16. So as you can see, yeah, from like 18 to 60 to 36, sorry. Okay. The average BMI is what, 27.3, which is also the same as the mean. So anytime the mean and the median are the same, it mostly tells you that there's straight up symmetry, mostly. Okay. Then you can also see that around 25, we're here. Okay. So is that good? Do you guys have any questions?
no.
Yeah, good.
So
Okay.
far.
All right. So straight up, who can tell me something about the income, the monthly income?
Mm,
We can
So
see the mean is higher than the
okay.
median, right?
Yeah.
Right. Yeah, proceed. Yeah, go ahead.
Yeah. So okay. Were you calling me or someone else is about to talk?
No. Anyone can talk.
Oh,
We
go
want
fit
to go
up. Go
first.
fit up. Try.
Okay, let me ask this question.
Okay,
If you
so
look at the,
from
let me ask you this question. If you look at it, what is the range, the income range where a lot of customers can be found? What is the range?
Okay, so the
How
range,
much? Mm-hmm.
I'm not saying well, but I'm saying customers lies mainly at 5,000, and with this distribution is skewed to the right.
It's skewed to the right. Yes, it's
Yeah.
right skewed. Okay, and that is true. Like a lot of customers earn around, let's say, 4 to 5K, right? Just trying to give a range around that side. So yeah, and it's also right skewed. So in this particular, we will need to do some kind of log transformation, or else our data set will be, yeah. So straight up, tell me something about the premium. Is it right, or is it left or right skewed?
It's skewed to the right as well.
It's also
Right.
skewed to the right, yes.
Yeah, but not as much as the monthly income.
Exactly. So it can sort of tell you something about the income, right? So obviously, since income level is right skewed and premium is also right skewed, it can kind of tell you that high income earners are most likely to take high premiums.
Mm.
You get it? Okay.
Yeah.
Churn amount, the mean and the
Almost
median, they are
perfect.
almost identical, right? And all the lengths are kind of equally represented. You get it? So I would say customers are evenly distributed across their policy ages. Okay, so it's fine. We'll just leave it. Claim frequency.
Yeah. Question.
Yeah, yeah, yeah.
Okay, the click frequency is for the 2 years data we've gotten.
The 2 years, yes.
Okay, all right. Thank you.
That's why there's even distribution in the tournaments as well. You can tell that there's yeah, for 2 years.
Yeah,
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 claim
2 years, yeah.
frequency. Is it left? Is this left or right skewed?
I think it's still right.
It's heavily. This was a heavy
Heavy,
rise.
yeah,
Yes,
heavy right.
right. The median is 0. This means that more than half of all the customers have never made a claim. You get it? So this is also telling us something, right? The mean of 0.7 is also being pulled by the minority who claimed multiple times.
Mm, mm,
You get it?
mm.
Okay. Then dependents, that's the last one. The mean is on the left side of the median, so that means that it is slightly left skewed.
See.
Okay. So more customers have 3 to 5 dependents than 0 to 1 because of where the median is.
See.
So yeah. Okay, all right. Let's proceed and look at
Holly, please, can you pull
yeah.
down your screen?
You want to see?
Yes, 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 yes.
Or the code? No worry,
You know
after I
we're
can
done.
share my notebook.
You said the notebook. Okay.
Yeah, I can share my notebook. I want you guys to follow and have the process,
All right.
right? So after
Yeah.
you just do it by yourself, but yeah. Okay. So now we are looking at the categorical variables. So we are looking at the distribution. So if we look at gender, male is what, 24, about 20, almost 25,000. Female is also, so you can say that male and female are what? They are what? Evenly distributed, even though female is just a few hundreds more than that, more than male. But I can say, even I don't even think it's even more than 100.
Oh,
What's 2508 minus 2?
168.
Come again,
Oh,
168.
yeah.
Uh-huh.
Wait,
That's the
hold on.
difference. You know,
Yeah,
there's no possible it's
168.
more
Yeah,
than,
that's the difference. Yeah.
it
It's
can't
less
be
than
that.
1%.
It's less than
It says,
1%.
yeah,
Are you
I think
sure?
if you're looking at it, and the difference will be less than,
It can't be 168. Someone should calculate it, tell me.
oh, it's 168, trust me.
You calculated.
No, I use my head, but I mean, I got it.
25084 minus 24916. Okay. It's 168, like he said.
Yeah.
He said, trust me. Trust the man that says trust me. Okay,
Yeah.
anyway, so that is for the gender, right? So they are almost, like he said, less than 1%. So I can kind of say it's okay. Smoker, I can also kind of say it's okay, right? Yeah, I can also say it's okay. As in like, so this is basically so when you take the whole data set, right? The number of male or the guys, okay, the male gender in the data sets, the female are 168 more than males in the data set. So I'll say there's an almost even distribution of males and females in the data set. So when it comes to gender, it's not skewed towards male or female. I'll take this as an even distribution. When you take smoker, the smoker column, I can also say it's even actually even evenly distributed. Okay. Now, when you take grade level, you can tell that the junior levels are a lot in the data sets, followed by mid-level. Then the senior guys are pretty much not that much. You get it? So it's just showing you different. And when you take the policy status, a lot of people are active. A lot of cancelled, pending renewal, lapsed, and renewed almost have the same data. It's almost seven, yeah, they're all in the 7Ks. So a lot of 21,000 are active, right? Payments behavior, consistent. A lot of more people in the data set are more consistent than, and then we have occasional late, and then we also have frequently late. So this is also a spread of the payment behavior, marital status, equal distribution, single, divorced, and married, pepepe. Then claim severity to critical. We have what one. You guys, do you know what claim severity is?
It's like a certain amount for this thing. Maybe some people actually claim the maximum amount for whatever
There's some people do
benefits.
what?
Maybe some people are able to actually claim the maximum amount that they are.
Mhm.
Yeah, it's just off the top of my head. I think that should be it. Yeah, probably.
Probably.
Honestly, I don't follow.
Yeah, probably.
Yeah, I also don't follow so.
Okay, I'm not in insurance actually, so I can't really
Who is
tell.
an insurance that can help us?
And please, concerning what?
The
Um,
claim
claim
severity.
severity.
Claims what?
Come again.
I'm not hearing the word well. Claims what?
Severity or severity. How severe you are claiming the thing.
Probably you're referring to the amount your sum assured, how much you are claiming. Maybe
Mm-hmm.
um if you are receiving like 50,000,
Yeah.
right? And probably you just started the policy. So and then maybe the waiting period could probably be like 6 months or 1 year. But it's still a lot of money. Considering maybe like you said earlier, if you are young,
Yeah.
you pay less premium. So it's a very severe claim.
Mm.
Okay.
Yeah.
Okay.
Yeah, that's it. Or should I explain more?
Hey
Maybe
guys,
I'm
I
okay
went
now.
off. Oh. I went off. Oh. What did I lose?
Can you please explain for the person that went off?
Salamusi claim severity near then.
So claim severity is linked to claim frequency. Okay. The
Okay.
claim frequency is the number of claims that the customer has made. The
Okay.
values range from 0 to 4, right?
Okay.
Now we saw
Okay.
that claim severity, when the claim frequency is 0, the claim severity is now like there's no data type there. They're like the whole cell is empty. So that
Okay.
means that people who did not claim their so this is actually a relation to claim frequency basically. So if how often are you the number of claims that someone has made basically,
Okay.
right? Yeah, so
Okay.
that's just what claim severity is a categorization of claim frequency, right? So she was just trying to break it down for us and saying that the number of claims that a customer has made. So if a customer has not done any claim, if the customer has not made any claim, the claim severity is none, is 0. It just don't exist in the database, right? If the claim severity is once, if you've made a one-time claim frequency or you've taken your claim once, that means your claim severity is what? Is quite low, okay? If it's 2, it's medium. If it's 3, it's high.
And
If it's
I
4,
think, sorry to
it's yeah,
cut you
critical.
off.
Yeah, yeah, sure.
I think it also depends on the number of lives covered. Or
Number of lives covered.
because you can cover more than one person on an insurance policy.
Right. Okay,
Yeah.
yes, yes. So that's also as in like so that would fall on that then in a way it also talks about the plan that you are on.
Hey, which insurance company do you work with?
Which insurance company what?
Please, just a
Yeah.
question.
What's the question?
So I also tried searching on the internet, and like I'm getting some the logic they are saying is
Mm-hmm.
that it's the financial size or the cost of an insurance claim. So if you're insuring
Mm-hmm.
something that is not very expensive, it looks like it's the cost the insurance companies will bear when they
Yeah,
actually pay
that's what
you.
I
So if
explained.
you are insuring,
Mm-hmm.
I lost. So I wasn't on the
Oh,
call,
okay,
so I'm
okay,
trying to
okay.
understand. Okay, so if that's what you explained,
Yeah,
then I
what
think
I
I
said
don't need
was
to go.
that it depends on most of the time your sum assured. Sum assured is the money you intend to get when the insured event happens, which is sometimes death or accident. So in the beginning, we
They want
understood
us to
that
die.
Mm-hmm.
in the beginning we understood that when you're young, there's a chance of you paying lower insurance premiums compared to someone who
Mm.
is older. So let's say someone who is in his 20s, young and healthy, insuring someone who is like maybe 60, right? Which is not really much of a high risk, even though the person is still old. But if the person is not 70 or 80, and then maybe you want the insurer. your claim amount to be like maybe 80,000 or 100,000. That's a lot of risk to undertake. Do you understand? That was my example.
Okay.
And
Does it
And
make sense?
typically,
and with the
typically,
f- and this is with a situation whereby maybe the person has crossed the waiting period. Maybe the person is like 61. The person is probably going to get money and all that. And these things, maybe in case the person does not disclose that the person has cancer or high blood pressure or anything like that sort.
That's like insurance fraud or something.
Come again.
Isn't that some form of insurance fraud or something?
But for
insurance,
the
what
meantime, we are not. But for the meantime, we are not addressing that. We are just addressing the fact that the person is young, and then is
Okay.
trying to
Yeah.
claim a big amount.
All
So
right.
on the surface level, everything is okay.
Okay.
So we are just
Okay, guys,
addressing the frequency.
let's look at
Okay.
something, right? This is filtering the data sets. We are just looking at two columns, claim frequency and claim severity. Okay. We realize that where claim frequency is 0, claim severity is what? Is none.
No.
Okay. There's nothing over there. That means the column is empty. We will treat it differently and say where it is 0, make it none. There's no claim severity. So let's do where claim severity, no, where claim um, frequency. Sorry. Okay. So over here, we can see that for some of the data sets where claim frequency is equal to 1, claim severity is low. For some of them, it's medium. So 1 claim ranges to low and medium. So that is where, sorry, which lady was speaking? What's your name? Was it Martha or Gloria or someone else?
Vanessa. Vanessa.
Was it Vanessa? No,
Yeah,
that was
Vanessa
that
made
oh,
wasn't
some
but
comment.
it's
Vanessa.
about
Oh,
Vanessa's
sorry,
voice.
not okay, right. So like Vanessa was explaining, so if you've made one claim, right? So I was thinking, okay, let's add, we are just doing some investigations. Um, she said something. What did she say? Oh, sorry. She said something about another column. Which column was it? Which column was she talking about? Did she say dependents?
Lives
Guys,
covered.
yeah, lives covered. So, okay, yeah, so, but we can't tell that from the policies, can we? Let me see. Do we have that in the data sets?
I think we can
Emily,
use that on dependents. We can
we should use on
check it
dependent.
out and see.
Technically, I don't think it follows just because you have the dependent is just more or less definitely going to affect your financial status, right? But you
Yeah,
left the
when you have a
perfect
lot
list.
of lives covered, they spread it across.
Yeah, I said it doesn't really tell. It doesn't really cover in this sense. So somebody here claimed, has done one claim. The claim severity is low, but has 4 dependents, right? This one, the claim frequency is 1, and the is medium. The claim severity here is medium, but has 3 dependents. So I don't really think dependents follow in this sense. If there was lives covered, then that would have made sense. So to break it down, right, we can say that okay, mostly ones are low, but for where ones are medium, that means the amounts it was heavy. It was quite severe. Does it make sense? Can
Sense.
we take that stand?
It
Right.
makes sense.
Yes. Let me see two. So you see, two is there ranging between high and medium. So you claim 2 times, but that maybe you could have that one time you came to claim it was pretty much heavy, right? Let's see three. So you get it right now. You can claim 3 times and it ranges between high and critical. 4. I'm sure 4. We are just okay. So are we good? Does that
Yeah,
make
we got
sense to all of us? Yeah. So Vanessa, good catch. Okay. We can proceed. So we are done with this, right? So let's do some. We're going to see a lot of code. So we are just basically doing some bivariate analysis right now, checking variables against what's the name? Variables against variables, right? So over here, we are looking at smoker versus claim severity. Okay. So this segment are the smokers that are yes smokers, people that smoke in the data set, right? And we are looking at their claim severity. So this tall green one are the nuns, right? Those that have never claimed anything in the data set. Okay. The light green, so that's the legend over here. That is just basically explaining. That is basically explaining the different. That's basically explaining the different claim severities compared to for yes smokers and no smokers. Does that make sense?
yes, yes, please.
Guys, are you sure? Does it you need more explanation? Does it make sense?
Um,
Okay, so you are comparing yes smokers and no smokers, okay, and their percentage, right? Their percentage distribution in the data set. So over here, 50, this is, you can see this is almost the same as this, right? Same height, right? You can see it clearly. So the people that smoke and the people that smoke and did not take any claims or their severity is none. It's just the same as people who smoke and their severity is also what? None, right? Um, Actually, if you check all of them, they all have equal distributions. If you see, um, if you check for low, so people that smoke and their claim, people that smoke and people that don't smoke, both have the same low around, let's say 13%. Yes. So we are just comparing smokers and no smokers. And so are more smokers taking claims than less smokers? Like those that don't smoke, sorry. That's what I mean. Does that make sense? Does this visualization make sense? We are comparing both against claim severity. Should I proceed?
is really worrying me.
Okay. So I said it's really worrying me. What is worrying you? Tell me. Ask me, let me answer you direct. Okay. Tell me, let me answer you direct. So both smoke and no, right? These people, all these people, okay, and both smoker, yes, these people virtually have identical bar heights across every severity level. Both smoker no and both smoker yes. So when I take this long bar is green, we are comparing this green against this green. The green on the left represents those who smoke. Sorry, no, those who do not smoke, right? Against those who smoke. They all have identical bars. And it is also green because they have not taken any claim. Their claims are zero. Okay. So none for both. They all are around like 57, 58%. That is people in the data set that don't smoke and people in the data set that smoke are all equal in terms of those who have taken claims or not, or how severe they've taken claims, and then it's none. Are we good? Are we good on that front? Hello? Are we confused?
Yes, please. I'm good with that.
Okay. So then explain the next legend, which is low,
So
if you are cool.
so the legend to the low
Yeah.
is equally the same, comparing the smokers against those who do not smoke.
Yes.
Those who have been able to make, let's say, low represents like one
Yeah.
severity level.
Sometimes yes, we saw two could be
Yeah,
low.
yeah. Hypothetically, let's say it's one.
Yeah.
We, we,
Yeah.
we are we are meaning we try to mean that there's no significant variation between those who do not smoke and those who smoke. If you are comparing in terms of risk severity level,
Yeah.
when it is low, and I think
Yeah.
the same logic moves for medium, high, and critical.
And critical. That is as simple as that. Right. So we are just checking the data sets and we are checking the what percentage of people who smoke and what percentage of people who don't smoke have none. Have none, what's the name? Have not taken any claim.
Yes,
So if we take, let's say me, Holyfield, I'm in the data sets. First, black is also in the data sets. We all know black looks like someone that smokes, and I don't smoke.
yes,
So when we are looking at my people, then we can easily say that, okay, and then and also both of us, we've not taken any claim, right? So it's
mm-hmm.
the same, 1-1. Oh, Holy does not smoke and he hasn't taken any claim. There's 1% of him. Black smokes. He also hasn't taken any claim. There's
Yeah,
one. So basically, we are trying to see if there's a difference somewhere between
yes,
smokers, that's people that smoke, and people that don't smoke. In case maybe we can see that the people that smoke, they take
a lot of
more
claims.
claim. Yes, you get it. So that's just the
Yes,
comparison we are saying.
yes,
But over
yes.
here, we can see that they are all evenly distributed.
Uh-huh.
So there's no difference whether you smoke or you don't smoke. There's no difference. So then that means that this is basically telling us something about the data set. This is basically telling us that smoking not kill people for Ghana like that.
True.
Or in actual terms, smoking does not really affect whether people take claims or not.
Yes.
But for some reason, I think generally it actually should, because that's where lung cancer and all these things
Mm,
comes in.
yeah.
But the way you
Or
retire from
the real
this,
people who gets affected don't have any insurance policy.
they've used all the money to buy smoke,
They will have-
the cigarettes. So it's all analytics. But yeah, now we go to average claim frequency by payment behavior. Okay.
Yes.
And honestly, they all seem kind of consistent.
Mm,
All of them, they seem kind of consistent. So so we are looking at claim frequency, right? Against payment behavior. So
yeah.
these are consistent people that pay consistently their
On an
premiums
average.
on an average is 0.659. And it's
Mm,
just if you compare, it's like they are almost the same.
yeah.
So people that pay late, people that pay early, people that pay consistently, their claim frequency is the same. There's no difference like that
Yeah.
in any of them.
Yeah.
So even those that pay occasionally late safe are even lower than those that pay frequently late.
Mm-hmm.
You get it? So that's what that one is saying. So basically, it's just trying to say that how late someone pays their premium does not predict how often they claim.
They will take. Yeah, they
Yes,
have, yeah,
they
I
don't
agree.
care whether they pay late or they will come and take when they have
They
to
will come
take.
and take.
Now they do come and take it. You get it?
Yeah, I
So
get it.
yeah. Then this is age versus claim frequency,
Mm-hmm.
right? We are checking age against claim frequency.
Yeah.
Who explained this one? So the age range is between 20 to 60, right? Oh, yeah, it's around 20 to 60 or something. Who explained this one?
And the
Uh,
older people are
so
making claims more than the younger ones.
By the, yes.
but you the younger ones, since in here school.
Who said claims no more?
Old boy just got the Churn prostrate are also younger ones.
First state in the say and why do be ko womb my enjoy beer.
How much you okay.
So now let's take the difference. We have to take it one by one, okay? So this first line, right? So we have claim frequency on the y-axis, and then we have age distribution on the x-axis. So now when we take 0, don't forget claim frequency has unique values of 0, 1, 2, 3, 4, right? So when we take 0, people that have never claimed anything, they are evenly distributed. You can tell that from different ranges. There are people who are 20, 21, 22, 30, 31, 40, 40, 50, all the way to 60 and 60 something that have not made any claim.
Mm-hmm.
Okay, that's what that means. Now, when we come to 1, it's also the same thing. You can tell that there's always somebody in a particular age that has not made that has made only one claim, right?
Yeah.
Okay. Now, when we go to people that have made 2 claims, we can see that there are some data sets. This one is very, what's the word? It's dim. Is it dim? Is the word? It's light, right? As
Or
compared to the
faint.
others. But then
Yeah.
it's almost, we can also say that there are people among all the age ranges, people within 20 to 60 have made a claim twice, right? Now, when we go to people that have made a claim 3 times, people between the ages of 20 to maybe 29 have not made the claim 3 times, so it's empty. So people that have made the claim 3 times are from 30 to 60 and above. We good? Right.
Yes.
Then when we come to those that have made a claim 4 times, critical people, we can see over here that they are between the ages of 50 and 60 plus. Is that explanation perfect for you guys?
Yeah.
Okay. Let's look at so this is we are just basically trying to understand the data sets, right? And the variables in it. That's what EDA looks to explore. Okay. That's what we are trying to do so that. So now let's look at water. Let's look at some more bivariate analysis, some more of them. What is this one called? This one, what is it called? It's called a box plot. It's called a box plot. Okay, so when we look at the box plot, we are looking at the box plot for BMI by claim severity, right? So this is the box plot for the low people. This is the box plot for the medium. This is the box plot for the high. This is the box plot for critical. Straight up, it tells us something. The value is the same. They are all nearly, or I should say, identical. Is my eyes good? I think the last two is kind of higher than the first two, but then you can kind of say they all have a median of 27 points, around 27. You get it? The red line shows their median. Okay. What's it called? The low looks like what 8 is. So who knows what a box plot actually does? That's a question I should even ask.
Box plot tells the distribution of the data set you have. It also helps to identify the outliers as well.
Thank you very much. That's exactly what a box plot does. It just basically helps us to tell the distribution of when we were doing the statistics, we were looking at what's the name? The interquartile ranges, right? 25%, 50, 75, low, and max. That's exactly what a box plot does. So the median is, so this is the middle one. So where the heavy box is telling us that when we take the data sets, right, and we look at the claim severity column. If we take all those people that have made low, their claim severity is very low. If we take all of them, they are distributed, their BMIs are distributed around 20, is it 23?
6. Oh.
No, it starts from here and ends here. So
Yeah.
maybe no, it's only 26. So maybe like 23. This 20. So let's just say 20. It's around
23.
22, 23 to this 30 and it's to 32. So this 32.5. So you let me say it's around 23 to 32. Okay. That's their BMIs. That means their body mass index. So that means they are, I mean, that's a healthy BMI, right? So BMI is basically, is it Obolo or not, right? Yes, your body mass index. So it's checking how
Yeah.
heavy you are. Yeah, so that's where
So
it's
it's
around. So
your height compared to your weight.
BMI is your height compared to your weight.
Yeah, so just because someone is 6 feet and 10 kg doesn't mean I think the BMI is supposed to be 26 for the person. So there's a way they calculate it.
There's a range. So there's a
Yeah.
range.
I think
So
it
if
also has to do with the age.
no
Oh,
BMI,
No, it's weight and height.
it's only
yes.
with
So there's
weight
a
and
there's
height
a
then.
there's
It's weight
underweight.
and height.
Yes.
Yeah.
Oh,
So
okay.
between your weight and your height, there's underweight, there's normal, and then there's overweight, and then there's obese. So what
Yeah.
Mm.
companies would use BMI for is that, okay, so if based on your records you are obese, that means you're liable to high blood pressure, diabetes, etc.,
Cholesterol.
cholesterol, high cholesterol, all those things, and that makes you a high risk in certain respects. So that's what
So if I
that's
lose weight, I
how they
can tell
would
them.
infer. In the same sense, if you are underweight, that also comes with its health risks. So that also comes with its own inferences that it would make.
So if I lose weight, I should go and show them.
You should update your records, yes, if you're with an insurance
No.
company, especially if it's in your favor. Hi, Polly.
Oh yeah, of course.
Please check your DM, by the way.
I've said it. Why? You're telling me my time is almost up. I know.
Yeah.
Maybe we'll do 30 minutes more.
15. Stop. You know, I even gave you extra time.
You never given me extra time before.
I did. I gave you extra. Like the time I said is left isn't the time that's left. So I'll give you 15 extra.
Yeah,
Hey,
because
Vanessa is
you were
very generous. So.
you were
I'm
using some
see,
of my time to
I'm
give
so
people
generous.
fans.
We were waiting for you. You weren't coming. ECG
It was
was
fully with me. Also
that's
because of you.
it's not
Okay,
me.
let's
No.
Go to
proceed.
the hub. Go to the hub.
Okay, so we are looking at claim severity and distribution by region, right? So when we look at Accra, we see that people, Charlie, but why is the data too, why is it always evenly distributed like that? Anyway, so we are looking at Accra, right? When we look at the Accra region, the people, the medium people, that is the people who have taken medium, their claim severity is medium, are more. Actually, across all the data sets, it looks like the medium people are more
Yeah, the
than
medium, yeah, queries, yeah.
they are more than the low people, they are more than
More
the
than the high people.
the high people, and it's always this one that is low, the critical people that are low. Okay, we good?
Yeah.
Yeah. Okay. Now let's look at what should we look at? Let's look at correlation metrics. Who knows what a correlation matrix is? Mhm.
Hello?
Yes. If we look at,
Okay, so
yeah.
Oh, wow.
correlation metrics tells the relationship between two variables.
Wait, who is talking? What's your name?
I'm Daniel.
You are Danny. Okay, Danny, tell us.
Yeah, so it tells the relationship between two variables. So it takes the variables and then compares them with each other to see the relationship between them, whether they are strong or weak.
Exactly. Okay. But if you look at this data set, it tells there's only one thing. that we can tell.
Yeah,
There's only one
yeah,
meaningful,
Yeah,
yes, there's
yeah,
only
yeah,
one meaningful relationship
yeah.
between the data sets, and that is what age and what claim
Claim
frequency.
frequency.
It also tells you that there's a positive, because this number is positive, it's a positive correlation. Okay,
Correlation.
0.23. It's calm. If they are perfectly correlated, what will be the number?
I think 1.
If
the number
yes,
will be
it will be,
0 or
no,
It
be
will be
1.
1
It will be
instead.
1. That's a
Okay.
positive
Oh,
positive
okay.
correlation, a perfect
Okay, yes.
positive correlation.
Correlation, yes.
So this is telling us that age and claim frequency, there is some kind of correlation between them.
Correlation, yeah.
There's a positive correlation. Positive meaning that the higher the age, the higher the claim frequency. And then we saw it when we saw it over here. You remember when we saw it? Wait, I think I passed it. Yeah, we saw it here. Age and claim frequency, where we realized that people between 50 and 60 have done claims 4 times. Okay. So it's just basically what's the word? Just telling us the same thing. Right? So the rest is basically telling us zero, negative 0. It's noise. It's just noise. Okay. Yeah. They're just telling us that there's no relationship at all between any of the other variables. Dependent is not related to age in any way. In any way. The only thing we can say is that it's positive because it's not negative. So that means that age is positively not related to dependence. So your age does not, but it's actually quite. So it's just, but this data set, I don't even trust it. But anyway, this is basically telling us that your age does not depend on your dependent. But I'm thinking the older you are, you should have more dependents, no?
Yeah,
Mm.
because
I
I'll
don't
have
think
more
Anyway,
it's
dependent.
true. I don't
come
think it's
again.
true because I'm saying I
You
don't
don't think
think it's
so?
true. Yeah.
Well, I
Right.
think there's a peak point. There's a peak point.
At least we should see something small. But anyway, the data set is telling us that they are not related in any way, but it's at least telling us that premium and age are negatively, even though it's 0 and there's no 0.00, there's some negation where I don't know where it's getting it from, but it's just telling us that there's so they are inversely related, right? So where your money is small, your age is high. Where your age is high, your premium is small, right? But that doesn't make sense, does it?
No, I think older people have more premium. Or,
You the bab. So
yeah.
Or
age
should
and
have more
premium.
premium.
So
Yeah, because
age and premium should be positively related.
yeah, that should
Yeah.
be something there.
But
Yeah,
anyway,
because
I
Charlie,
can see
yeah,
something at a monthly income and then premium.
monthly income and premium. Where is it?
Mm-hmm.
Here. Monthly income and premium.
Like some small correlation.
zero
Uh,
point zero 0.01.
yeah.
It's very small.
It's very small.
It's very close to 0.
Plus,
Yeah.
looking at the age and frequency,
The
claim
age and
frequency,
frequency.
that's the next positive correlation that we have.
But that correlation is very close to 0.
But age
It
and what
hasn't.
frequency? But it's 0.01, right? Where's age and
Mm,
what frequency? Yeah, that's So
no,
claim age and claim frequency. That's the only this thing that is related. That's the only thing that makes sense in this correlation matrix. age and frequency of 0.23. That is telling us that the older you, and it's a positive, so they are positively related. The older you get, the more claims you make. We good?
Yeah.
Yeah. Now let's look at more, and we are doing this EDA because it's going to affect a lot of things we'll be doing, like
the weights.
monitorizations. So now we are looking at outlier detections, right? I'm just going to go straight. Does age have an outlier?
No.
Does BMI have an outlier?
No.
Does income have an outlier?
Yes,
Plenty.
very much.
Yes, a lot of outliers. So basically, someone should explain to the class what outliers are. I don't want to do all the talking.
It's a data
Okay,
point
so
that
let me come in. So outliers are, example, when we have a class of younger children ranging from 3 years to approximately 6 years.
Is it just me? Because I cannot hear you.
Hello? Is it, am I okay?
I mean, we can hear you, but you're not loud enough. I mean, you're not loud enough for me. Please proceed.
Okay, so I'm saying when let's say in a class of students we have about we have children of 5 years to 8 years, then all of a sudden a kid, or let me say a person of age 18 years comes to join, that person is an outlier because the age does not really fit in with the children.
You're right.
In the same way, when we have a salary, people taking a salary of 1,000 to 400 in an institution, and then all of a sudden we have someone taking about 15,000, that person is an outlier because it takes much more than the people there.
Thank you.
So
Thank
like
you.
Mr.
So,
Wale will say, everybody's taking one. You pay two.
why?
So,
Or
You are
counting
outlier.
celebrities and including
hello,
TikTokers.
So, like the way all of us, we
hello.
can sound like, yes, yeah.
Yeah.
Go ahead.
I was going to explain what an outlier is.
Okay. Let's see your version.
So basically, an outlier is just like a value that's way off from the rest of the group. Like it doesn't
It's
fit
coming
the
in. Is a
normal
what?
So
I'm
a
saying
value
that
that
an
is way
outlier
off.
is like a value that's way off the rest of the group. Like it doesn't fit normal pattern.
Exactly. That's in simple terms who an outlier is. That's all. In simple terms, it's not part of the pattern. It's just like the way black is an outlier in all of us here. We'll just proceed.
You come for you.
Black, don't blame me. Okay, so let's do, this is the part where I do some data cleaning and things. So let me look at this. Okay, so with here, we've already checked for duplicates, and then we've already done some duplicate removals already. So we know we are working with a 50,000 data sets. When we check the .info, I saw that what's it called? Application dates, right?
Yeah, string.
Look at the data type. It's a string.
Yeah.
Is it right?
No.
So it's not right. I mean, it should have a date type,
Yeah.
standardization. So I'm just trying to standardize that particular column to a date type.
Mm.
Okay.
Yeah.
So the reason why we do that is because if it's a string, if I want to, it's a date. So it's giving us a date, let's say 260132 or whatever, right? If we want to break it down and then extract months out of it, extract years out of it, extract days out of it, we will not be able to do that if the date type is a string. So we need to tell Python that, okay, this is a date, right? And then once it's a date, it will be able to do a lot of extractions from it. It knows what the points in its data set actually mean. It's telling us this is a year, this is a date, this is a whatever. Okay.
Mm.
So that's why we have to standardize it so that we can have 240101, we can have it properly done. And then we'll see pretty well why we have to do that. Now we have to do we can't leave the so we know that customers that have zero, we realize that customers that have zero, what is it called? Zero claim frequency. We realize that customers that have zero frequency, customers that have, zero claim frequency, their claim severity is none. Okay. So obviously it makes sense. If you have not made any claims, obviously there's no way we can say, hey, the claim you made is severe, or this money is heavy, or is low, or is high, or is critical. You get it? So we are just going to fill all of them with none. That's all the data set is saying. Filter the data sets. We are filtering the data sets, right? The column where claim severity is equal to, so for the column claim severity, we are saying fill all the non-availables with none. That's all we are doing, right? And then after print claim severity, and then let's see the counts that we did. So we have 28,927 now. So now if you check the data set for okay. So now when we were checking for missing values, you remember only one column had missing values, right? Do you guys remember? I don't want to rerun the code because I've already run it. Otherwise, I'll have to start all over. Where did I check for missing values?
I think it was up there. Was it?
Is it up somewhere? Where the data sets? Blah, 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 blah. This duplicate rows. Shape after duplicates is done. df.info, df.describe. Here.
Yeah,
This
yeah.
code. We saw that there's only one column that has missing values, which is claim severity. It takes up 57.85% of the data set, 28,927. So we can't have, since it's we are running a machine learning model, we can't have missing values in it. So over here, so that's what we are doing. We are cleaning the data sets, right? So I've come here to where it is zero, just make it none. Okay. So if we do df Claim severity, Control C.
That is now
That's unique, right? So now our none has come here. Hi. So now we have four, 1, 2, 3, 4, 5. We have 5 categories for claim severity. None. That means none are people that have never made any claims, or they've not made any claim at all. Their claim frequency is equal to 0. High, low, medium, and critical. We already know this. Okay. So that's exactly what I've done. After I think there are some columns that we don't need. We are getting close to the machine learning part, right? So we want to do away with columns that we don't need. Okay. So if you see here, I have dropped full name because we agreed that full name is useless. The agent's ID for the agent that's registered you is also useless. Wait, but can this thing be useful? I don't think it's useful. Agent's name is also useless. Okay. Do we all agree? Guys, that's what I thought. So
Yes.
if you think it's useful, I can just put it back.
Which one?
I dropped 3 columns: full name, agent's ID, and agent's name.
And nah, I don't think it matters.
Yeah. But in some low key sense, there could be a particular agent who he's only going for, So immediately this agent's name comes up, it could tell you that this agent is actually registering only high premiums or something. It could be there.
Yes.
Should we investigate?
Well,
Yes, investigate.
You don't need. The
Maybe-
Ghana
maybe-
agents, they don't care. Anything they'll take. 5
maybe
cedi
for a
insurance
different
card they'll take. Come again?
maybe for a different like case study for the employees. I think
Yeah.
that one they might matter. Yeah.
If it was some outside country, yeah, but Ghana plan your 5 cedi card will take, so it's fine. Okay, so now
Obiaji holy 5 CD.
we've gotten to the place that I want us to get to. This is exactly the place I wanted us to end. We want to build. So in this data set, right, we know we are about to do a machine learning, and it's going to be a classification model that we are about to build, right? Classification model, we already know. I mean, will someone explain, or I should go ahead and explain? Okay, so classification model is basically having labeled data. Right? Sorry, someone talking. Okay, so classification, we have labeled data, right? We have classified the data A, B, C, D, or AB, 1s and 0 binary, right? So we want to have our targets, and so far we do not have it. Okay, so now what are we going to use to do our target variables? If we look at these are the columns we have so far. Which of them can we use as our target variable?
Claim severity.
You think we can use claim severity as our target variable?
Yes.
Can you use multiple variables?
No. No. There should only be one target variable.
Wow, that's
One target
that's very-
variable as in
So our target variable, we are building a machine learning model classification. So what is our target variable? That's the question I'm asking right now.
Charlie.
but
That's tough.
Our target variable will be the claim, right?
Mhm.
Hello? Hello?
I'm here, I'm listening.
Yeah, I'm saying the target variable will be the claim, right?
It's actually the claim frequency.
Hello?
Hello, I think we can use the claim severity because that's what we may want to predict.
Frequency.
You think claim severity can be our target variable?
Yes.
So if we look at the problem, so if we look at as this thing, are we going to say claim
Polly,
severity? Yes.
let me come in a little.
Yeah, come in.
I think no, not. I think someone. Ellie's background is very noisy, so he has to mute himself.
Oh, sorry.
Yeah. Polly, you can continue.
Okay. Someone was asking a question. Why are you guys saying claim severity can be a target variable?
I say so because it may be the variable that we may want the machine model to predict.
To predict. Does that solve our business question? If we make that our target variable?
Yes.
How?
Yeah, go ahead and
I
explain. I'm
believe
listening.
so. For the insurance company, in
Uh-huh.
what they really, or I believe they really want, is that okay, we don't want people making, we don't want a situation whereby someone who um we've stratified as a risk group, or someone we haven't stratified as a risk group, coming out of nowhere to make a huge claim.
Right.
That's what they really want. So if we've stratified someone as a risk group and they come to make a huge claim, then we know beforehand so that we are not caught off guard. So if in a way we are able to predict um, the risk, which I think someone has already explained to us, the risk severity, right?
Uh-huh.
Which I was able to understand that that if let's say you insure something like a luxury car, right? It means that if you are going to make a claim from it, you're going to make a huge claim, right? So if you are able to we build a model to predict the chances, or the risk at which a stratified risk group is to make a particular claim, then it works and it solves their business problem. So we stratify people who are risk group as really risk group, and we know and we give it to the insurance company that, oh, these people are likely to cost you people a lot, these guys wouldn't cost you a lot. Then okay, then the people can use the data to then say that, oh, then we can cap them at this price and this price.
Okay.
I'm also coming in.
That yeah, come.
Little drops of water can also make a mighty ocean. So frequency would also come in.
Come again?
Frequency would also come in. Little drops of
Yeah.
water can.
Kwame, oh, little bit.
Nsuo na ɛtɔ wɔ ha o, na ɛyɛ saa no.
Hello.
Myself. Yes.
Yeah,
So
I'll
yeah.
also say that the claim frequency will be like a priority if the company is looking at knowing who is likely to claim. And for the claim severity, it's also going to be a priority if they want to know like the impacts of the claims. So depending on what we are looking at, then we choose. But since we are looking at we wanting to know who is likely to claim, maybe I'll go for the frequency. I don't know.
Excuse me, please come in. the impact of the claim, isn't it from the claim severity?
Yeah,
It
that's what I
is.
said. The claim severity. If you want to know the
Okay.
financial impact of the claims, we can use the claim severity as the Y, the target Y. But if you are looking at who is likely to claim, then we look at the claim frequency. That's what
Okay.
I think.
Yeah, I
This
agree.
is what I also think. Hello, hello.
Yeah, I'm listening.
Yeah, so both matter because we are building a model that actually needs to not just give us one side of the equation, like just the claim frequency, but in 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 um in other factors, like depending on, like she said, the impact. Because there are times when the claim frequency alone will not be enough. You may need to know the what's the word for it? Is it the rate or like the again like the impact, the severity at which the claim is being taken? I don't know if I'm making sense.
So let's say we split them into weights, right? That between the two, which of them will carry more weight?
So what are we deliberating about right now? Which one and which one?
The
Claim
frequency and
frequency
then
and
the
claim severity.
severity.
First of all, let me just take out
For me,
flame. Sorry. First of all, let me just take out claim. We are going to make it okay. Well, anyway, we can also make claim frequency a categorical variable, but we saw that claim frequency and claim severity, there's a link between them, right?
Yeah, yeah,
Yes. When it is zero, we have just done some data cleaning. When claim frequency is zero, claim severity is none. That's how we've categorized all the claim frequencies that are zero. Now, when claim severity is one, when claim frequency is one, claim severity can be either low or medium. I hope you remember that.
yes.
Okay.
So it's like they work hand in hand. Or
So they have done the working out. It's their data set and they've done the working out, and they are telling us that if claim frequency is one, it can be either high or medium. But we also realize that the high and the medium can be in a sense that low and medium. Sorry, when claims frequency is one, it can be low or medium. It is low because it can be low because obviously the claim frequency was done once. Someone took money once and then it was a low amount. Someone can take money once and then it will bankrupt them. So, or they put it in the medium category because even though you took it once, it's quite heavy. So it's medium, right? We also realize that when claim
yes,
frequency is two, it can be either medium or high. Okay. So now it being medium or high, also the same thing. You took it two, you took the money twice, or you came to make your claims twice. And it's on the high side because your amounts were pretty high. Same way for what's the name? If you came to take three times, it was either high or critical. If you came to take four times too, it could also be either high or critical. Now, if we use claim frequency as our target variable, we are going to miss this uniqueness. Does that make sense? We are going to miss this uniqueness that this person. So if we said this person took it once, how are we now going to know whether it was on a? So if we use claim frequency and then we use a category, I mean, we build our model and then we do a prediction and it tells us that okay, this person that is coming, his claim frequency is one. How are we going to know whether the one that he has taken is on the low side or is on the medium side? Do you get what I'm trying to say? Am I making sense,
yeah.
guys? Okay. So if you ask me, claim frequency is a proxy to explain claim severity. So claim frequency alongside other things in the data sets, which we cannot see with our naked eyes, is telling us that it's telling us that even though the claim severity was done once, it's a medium claim. Even though the claim severity was done 4 times, it is high. And then even though some claim severity was done 3 times, it was critical. Do you get what I'm coming at? Are you guys lost?
Yeah.
Are you guys lost?
Yeah. Hey, no.
Yeah. Are you sure? Who is lost?
I am okay. Oh.
You are all okay. If anyone is lost, speak now or forever hold
I
your
think
peace.
I think the thing is it's not straightforward like that. There's many
It- so
variables
for me,
affecting many variables. Yeah.
so for me, for me, what I'm saying is that let's take me, myself, Holyfield, and Daniel. Holyfield
Mm-hmm.
has made a claim 3 times. The data set is telling us that even though I, Holyfield, I have made a claim three times, I am on a critical side of claim severity. That is because even though I've made it 3 times, I'm critical. I'm not even high. But then the data set is also telling us that Daniel has taken it 4 times, but he is on the high side. So how is it that I have taken 3 times, but I'm critical? Daniel has taken 4 times, and I'm on the high side. So that's why I'm saying that if we use claim frequency as our target variable, we are going to miss that niche, that importance, right? That is telling us that Holyfield took 3 times, but he's a critical person, and Daniel took 4 times, but he's high. Do you get me? We will miss that. We
Yeah,
will not even,
yeah.
yes. So we can, the reason why the data set is able to then go ahead to explain claim severity is also because there's something alongside claim frequency. It could be premium, it could be amount claim, it could be something that we are not seeing in the data set,
You are not
right?
seeing. We
We are not
need
seeing it. We can't see it. So the only thing that will see it for us is the machine learning model that we are about to build.
microscope.
So now that takes out claim frequency. Personally, if you ask me, I don't think we can also use claim severity as a target variable. But it's not a bad idea to use it as a target variable. But I think we have to do something called risk category. We need to create our target variable from other variables, feature engineering. If you ask me, that's what I think.
Okay.
What's a
But
Reverton
but
point
what about
end the session? I think after Benjamin's question, or is it Emmanuel?
so I was also thinking that okay, I'm sure we're about to end. Maybe we can go think
Yeah.
about it more. But could we
Yeah.
but also consider maybe a number of categories together and then put weights on them?
That's exactly what I was going to do. It's not just going to be this thing. That's
Yeah.
exactly what I was going to do. Or that's exactly what I was thinking. So the
Okay.
reason why, so that was the reason why I'll tell you the reason why I don't want to use claim severity as a target variable.
Yeah.
This is
Okay.
because, yeah.
Yeah, please, Holly, please go on.
Yes, the reason why I cannot use claim severity as a target variable is that I was hoping somebody would catch this. There was a reason why we did the EDA.
Uh-huh.
And during the EDA, it told us a lot of things. We checked a lot of things and we realized that, what's the name? When we checked claim severity, there was a lot of class imbalance. Now, 58% of the data sets did not
It's
make
missing.
any claim, right? 58% of the data set did not make any claim. So this means that what's it called? If we build a model, it's
If you split
going to be
it,
skewed.
yeah,
Bias.
It's going to be biased. You get it, guys?
yeah, and yeah, it should not be
It,
a complete representation of the
it will
actual
not be a
result.
complete of exactly. It's going to be very, very biased because it's going to be skewed towards the non-people. So when you give it one or two numbers now, it will just tell us, oh, it is none. He'll make any claim. He'll make any claim. He'll make any claim.
But he will make claim.
But he'll make claim. You get it?
And then
So
insurance company no.
yes. So now,
Hmm.
if we also look at, there are a lot of things. Most of them are none. You get it? So
Mhm.
I want us to, I want us
So do we
to,
exclude?
so we are going to do a feature engineering.
Okay.
And in this feature engineering, we are going to create our own target variable called risk category. We are going to categorize the risk. And in this place, we are going to take some weights, right? Like someone said. So this is what I want all of us to go and do. And then this is exactly where I wanted to end. Because from here, next week, it's just back, back, back. You get it? So
Movement.
let me show you something that I
But the
did.
big no no.
Oh, let me show you something that I did. Wait, okay. Do you see my other screen? I've switched screens. So I'm just trying to do a little bit of explanation why we engineer the targets, right?
Okay.
Okay. So first of all, there is no risk score column in the data. Okay. So we want to build, first of all, something called a risk score. And we are going to build it using our domain knowledge or business rules. Then we train a model to predict for new customers who have never made a claim. So first of all, our risk score formula is equal to what? 100% or 100 points. Okay. These are the components that we are taking into account. That's why I was asking you guys, is this important? Is this important? Is this important? If you remember when we're doing df.info. So me, this is what I used. Age, BMI, smoker, claim frequency, claim severity, and payment behavior. And I put all of them, sorry, and then I gave all of them weights. If your age, the older you are, then that's what 20 points. So this is the rule. If you are
20%.
less than 30 years, then remember we said that the younger you are, the less premiums you pay, and even the less you don't even take a lot of claims, right? Because you are healthy and all those things. So if you are less than 30 years, you get 5 points. If you are between 30 and 40, you get 10 points. If you are between 45 and 59, you get 15 points. If you are 60 plus, that means you die soon, so you get the full 20 points. We good? And this is based on the distribution of age in the data sets.
Yeah.
Yeah.
Yeah, giving them all the tips. I think you said they should try their hands on before next.
No, so this is what I have done, and then I'm showing them what I have thought. Someone can go and do something similar, but add more components. You understand? So this
Yeah.
is what I've done, and I'm showing them. And then someone can come. So tomorrow, next week, we will
Sunday.
take like Sunday, we will take 3 people to show us what they have done, and then we'll all select which one we will use as the risk score formula. This is what Holyfield has done. You can take screenshots. You can go and look for more. By when you come, you tell us why you chose those components, and then we will all decide whether we are taking it or not, or whether we are dropping it. But then this is the rule that I use. After, then we'll create our risk category from it. So when we take one person, let's say Holyfield is 20 years old. Okay, no. So let's say Holyfield is 30 years old, right? So because I'm 30
Hey.
years old, immediately I get 5 points. Okay. Wait, less than 30, no. So I get 10 points, right? So because I'm between 30 and 44, so I get 10 points. So that means I've already gotten the 10 points. My BMI, I have no idea what that is, but let's say I'm between 25 and 29, maybe, let's say, right?
Then you are
So,
overweight too.
okay, then I don't think so. Then less between, I am less than 18.5.
Then you are
That means I
underweight.
have, I'm
Yeah.
underweight.
Holly,
Okay, you
you
let
will
me pick.
share this, right? So I think they can just.
Oh, Vanessa, we are coming.
You've
We are
already
coming.
passed
Don't
past
worry, don't worry. Give us like 2, 3, 5 minutes. We are coming. I'm just
why
trying to
1 minute,
just do.
please.
So already I have 10 points because my age is between 30 and 44. My BMI, let's just say I'm underweight. So I have 10 points. That means I have what, 20 points already. Okay. Am I a smoker? Thankfully not. So there's 0 points over here. So I don't get this
Yeah.
15 points. If it's black, you get a 15 points. So far I have 20 points. Claim frequency. Let's say I claim it, I'll take the money. So each claim is 5 points. So let's say I have taken the money 4 times. That means I'm capped at 20. So that means 20. So 20 plus the 20 already, I'm at 40. Okay. Claim severity. I'm very critical. That's 15 points, right? So that's what 55. And then my payment behavior. Let's say I'm a late payer. That is no. I mean, I'm a consistent payer, so 0. So since I'm a consistent payer, 0. So my risk score is equal to what? 55. Have you gotten it? Based off all the things we've calculated, my risk score is now what? 55. Now, for the 55, where will I fall? Will I fall under low, medium, high, or critical?
Mm,
Hmm? I'm 55. Where do I fall?
You fall like high.
Yes, I'm high. High is 52. If I'm 52, between 52 and 67, so I'm 55. So my risk category is high. So now when I go to the insurance company, they easily categorize me as this nigga is a high risk category guy. I hope that makes sense, guys.
Mm-hmm. Makes
Okay, so this
a
is
lot of
this is
sense.
what so for me, this is what I'm going to use. The next, you guys, when we meet on Sunday, I'll take 3 of you, and then you tell us what you think we should use as a component or your own weight. If not, we'll just go with this and then we will do what? We will proceed. So at this point, I will leave it here. Once we get our target variable, we can start pretty straight go ahead and start building our model, trying different algorithms and then checking different evaluation metrics for them. That'll be pretty much standard. So yeah, so I'm going to leave the lesson here since Auntie Vanessa keeps sucking me, and we will continue next week. Sorry, Sunday. We'll continue on Sunday.
Sorry.
Okay.
Is this what I get after giving you all that time? Okay.
Oh,
Auntie,
Holy, no
Auntie,
try.
and Mama Nessa, we know you are. We know. We
Holy, no
beg you.
No,
try.
no, no problem. Sunday.
Uh,
So I'm not
Yes,
perturbed.
Vanessa is like Sunday, Yabeshe.
guys, it's only 4 people that feed the
We
feedback.
have
Guys, I need you
feedback.
guys to fill the feedback form for me. It's really
yeah,
important for
Oh,
me.
guys. Yeah, that's true.
yes,
Please
please.
go
Black
ahead
has
and
reappeared though.
Kindly
mm,
kindly fill the forms and then a
guys, all
comment
of you should
that
feel the yes,
or
yes.
send
If I
an
tried, if I didn't try, if there's something that you need me, maybe I'm speaking too fast, maybe you don't like the way I talk, you just put all inside. Criticisms are allowed, and then that's how I would use to improve, and then to teach you guys better, I'll explain things more.
I think you have a
If I'm
nice
too
voice.
slow to, if I'm too slow to, let me know that I'm too slow. So
Wait, too light or left?
so yeah. Okay, guys, please fill the form. All of you, please fill the form. Everyone here should fill the form, please. We beg you. You're an ALX, so you know by now they're this thing there's
it's
and
a very simple form. In 1 minute
yeah.
done.
Okay, guys. Have a good week. I'll see you guys on Sunday.
Sure. Thank you so much, Holyfield. Very interactive. Very good
You're
session.
Thank
welcome, Mama.
you.
You're welcome, Mama, for
It
this.
was nice being on
I
this
will
call
get
with
you.
everyone.
Guys, please don't leave without filling the form. So, Emmanuel, have you filled the form?
I'm currently feeling it. I've spent like 30 seconds.
Oh, okay, okay. See, it's a very short, simple form.
Yeah, very short and simple. ALX ways.
I know, right? Hi, Gloria. I hope you are filling the form. Hi, Martha. I saw Vanessa on the
Hi.
call. Has she left? Have you filled the form? Martha.
Yeah, I have.
Awesome, awesome. Gloria, okay, great. That's wonderful. Thank you guys. Ida, Henry, Emmanuel, Imadaf. We have about 5 Emmanuels. Great, thank you. Nina, I hope you filled the form. Hi, Black. Have you gotten enough responders?
Yeah, I've gotten that.
Okay, thank you so much, guys. Like you heard, Sunday there's an assignment. So Sunday is
They
around the
won't come. You get the assignment, they will not show up.
Oh, they'll
Hey.
show up, they'll show up.
You they don't know.